Okay, so um, I want to show you something more. Um, it's always very useful to go to higher time frames. Start from the higher time frames. Um, this particular website does this a lot, and so I want to do a right click and then a reset on the chart to get things to be drawn better than that. So I'm a big believer in chart patterns. I don't necessarily use them a lot, but I sometimes will to just to kind of confirm, give me some confirmation as to where I think the price is going. Um, One of my favorite chart patterns has a, if you go to the pattern site, this is a good site by the way. Bolkowski's Pattern Index. Okay, this guy has a lot of good books on patterns, and he's actually gone and collected data on the reliability of these patterns. Excuse me. And so this is a really great site. On this computer, haven't favorited that one yet. But anyway, you see that they've got busted patterns, candlestick patterns, and some of these are very worthwhile. By the way, they're very high percentage trade patterns. Um, Anything that's 65% and above, I'd consider useful. Um, it just adds confirmation to whatever it is that you're doing. So, um, that's a good source of information to inform your trade. I don't make extensive use of these, but um, there's probably a wealth of information here. But by the same token, you don't want to overwhelm yourself with different ways of looking at the market. You want to look at it market as simply as possible and just stick with that. So anyway, I recommend his books. I recommend you look at the statistics. Be very cognizant of the things which fail, and only look at only consider trading the ones that are high percentage trades. Um, the others aren't worthwhile. So anyway, my point of coming down in here was that there is something called an descending and ascending broadening wedge, like this. And if you recall from our chart over there, there was a definitely a declining or descending broadening wedge, and there are some statistics here that he's gathered that are useful. I don't know. It seems like I've seen better. I've seen better statistics than this. Average rise and decline, break-even failure rate for up and down, not ranked. Okay, this one I believe used to be ranked, so it looks like he's changed it. Let's see if he's done anything with the ascending wedge, because this used to be what I used to trade quite a bit. Ascending wedge, ascending, averaging down. Well, I haven't been on the site in quite a while. The wedges. Oh, here we go. Oh, rising, descending, broadening. Ah, okay. All right, there we go. So this is ascending. Throwback, pullback rate, 68%. Ah, here we go. Okay, percent meeting target price for up-down breakouts, 70 to 65%. So this is how often it actually meets the price target. So that's your success failure rate, basically. Oh, here you go. Um, breakouts 52% of the time go down. My experience, irregular but trends upward 65% of the time. Okay, well anyway, that's a bit of a red herring, I guess. But my point was that basically we have a wedge here. My experience with wedges has been quite good. They tend to perform very well, in my opinion. And I only put this for just like an aside, not very, not really central to my trading approach. But that's how I would draw that wedge. You can see that a lot of times it results in an upward ultimate goal. Usually it'll go quite a bit higher than this. So my prediction for this in the monthly chart is that in the long term, price will go at least to here. So I don't know what it is that's going to cause that, but looks like the pound will go quite high. I think it's going to go probably higher, like maybe close to double this, something like that. But anyway, that is a bit of a red herring. Rabbit hole. So let's go back. Anyway, my point being really that I wanted to make was that these are channels. That's a channel. You can probably find a channel here. Sometimes they're a little bit more difficult to find, but here, let's just draw one. Just not going to leave it on the chart, but just for the sake, let's just pick one. So you could say, you could be inclined to draw a channel here. That wouldn't be necessarily my favorite channel. I might rather go there. And that does seem to hold a little bit more truth to it, because you got that connection there. It's resistance there and it's support there, and you see it's resistance there, it's support and resistance there. It even comes back into play here for a little bit. That's not necessarily wrong. As you see, it does get utilized. But there might be better ways to draw it that might be more useful. Something along those lines might actually be more accurate in terms of how the market responds. It's easy to because we have the benefit of everything here to the right, so that helps us to decide what's really a valid channel or not. But over here, let's say we're over here in December of 07. So probably what we would have done, given this much information, is we would have, around here, we might have sold it, and we could have just stayed in it until here, or perhaps into there. Having this information already, that would have been, and especially that candle, it would have been a good trade. Of course, we can see that it would have been a good trade. Here, you could have sold it, and of course, if you stayed in it all the way until, let's say the moving averages cross, for example, or basically, you could just eyeball it and say, well, I'm going to stay in it until it just seems to stop moving down. So, if you were generous, at 140, so you could have gone from 198 to 140, basically, and that's a lot of pips right there. So that's how I would have drawn that channel. Now, the good thing to know here is that, let's leave that there for now. Let me draw that a little better. Okay, I think that's a better channel. So you see, it came out of this channel, and it did come back in, and it did find more support at that same side. Now, if you had bought that, you only could have really ridden it to the midpoint. You still probably could have made something off of it depending on when you bought. But like you might have bought after this green one, you might have let it go against you a bit and then closed it when it went there. It does that a lot. You'll see it'll find support and it'll bounce off with a strong green bar, let's say, and then it'll fade back. So, you know, some of the volume, this might not be the best example, but you'll see that the volume will push the bar up at a point of support. It'll fade back, and then it'll push it forward again there. In this case, it's probably not really a fade. If it is, then those were some deep pockets that were willing to stay in while it kind of went against them for a good bit, but then you see that it did ultimately go in their favor. So, you know, if they can ride out the loss and hold it long enough, you can see that it did go into their favor. Of course, this is a monthly chart, so they would have had to have held that for, you know, a number of years. It looks like 3 years right there. I'd say that's probably unlikely for most investors. But given this the candle right here, you might have sold that, and you might have stayed in it until you really saw some really confirmed bullishness, which I would say is probably maybe right around here. Anyway, let's get back to the channels. I often digress. So here you see there's a channel breakout occurring, and it's real because, especially obviously, you can see that it was real as it continued. It doesn't come back in to the channel. It wouldn't have continued to go up here if it was planning on coming back in, if that makes sense. At least you wouldn't think so. But if it does do that and you don't have another channel in place, don't trade it, because you just don't know what it's going to do. If you do find that you have another channel in place, then you know, it seems to be a confirmed channel, then, you know, feel free to trade it, but be careful, because if sometimes you'll misdraw a channel and it won't be confirmed, or it'll look maybe somewhat confirmed, and if you're not careful, it'll go against you. You could, I guess my point being, and I'm kind of stumbling here a little bit, but basically, if you don't draw the channel exactly right, you have to be prepared to adjust your channel. Now, oftentimes, you can be slightly wrong about your channel, and even sometimes more than slightly, but as long as you have you know, used good risk management, you've covered your stop with you've covered your trade with a stop, then you can get out with next to no loss. So anyway, moving forward here, what you see here happening is, as it breaks out, it is forming another channel. It's obviously easy for me to draw this because I can see the future, right? You wouldn't see this obviously if you were in here. So if you put it all the way to the right and cover that up and get rid of this, what you have to work with here, you know, you might do it like this. You might want to put one circle there, maybe one circle there. You might want to do something like that, you know, for the time being. And that's not necessarily wrong. You see it does find support there. or resistance. It also finds some support there, but it does quickly, break out of that as well. So that's the other thing too, is you're just not sure how long these channels will last. So sometimes they'll form and then they'll bust. Like this right here. This is actually going to go up, but if you looked at everything to the left of that, you kind of would have thought that looked bullish, but that looked bearish, right? So you might actually have bought that and then only to have it go against you, and then it turns around, and so you might have closed it, somewhere around here, but then you saw the green bar and you see it continues to go up over the red, and then right around this green bar, maybe when you finally decide, okay, yeah, it's going to go up. So that's when you get in, and you might ride that. Of course, this would give me reason to pause. This red bar, that might be enough for me to close it out. And even if it was break even, I would still probably close that and just wait for another opportunity, which looks like it would have been here, and it would have sold that, and probably would have been stopped out as well, or it's about 100 or 200 and let's say 130 points. So I might have stopped. I might have closed that out, but here you can see there's another channel, and that's really the one I wanted to talk about. So you could probably have drawn a channel here because it looks very channel-like in my opinion, going this angle. I think that might be a better channel. And then of course this is very much a channel, and then of course this as well. So you can see how it's easy to draw it in hindsight, but let's move this out of the way. Let's put this back over here. Let's give this a little bit to work with. So I said that there was a channel here. I like that anyway from the beginning. So that's, that's roughly that's a channel. Sometimes, you see there's a lot more trading opportunities if you'd drawn it this way versus the way that I had it earlier. And what you're looking for are trading opportunities. So this, of course, is a better way to have drawn it. But anyway, the point is, at this point, now that we already have that channel, we can get rid of this one because we don't need it anymore. We already have this other one. So now we have a breakout occurring here. And generally what happens when you have a downward channel like this, then the breakout will either be horizontal or it's going to be going up. And what this is helping you find is it's helping you find basically what are changes in trend, and that's really what you're looking for. So you see, I'm using this, the bottom of that, as part of my channel, inference here, and then you see that I'm going to use the top of that and the bottom of that as part of my next channel. Let's see how that works out. Okay, so you see that didn't last very long. Okay, so very quickly we're out of it, and that green bar confirms that was a confirmation for me as well. We're probably going to be out of our channel, unless it comes back in which case then I'd use my channel again. But given what we have here, I don't want to draw it with the ability to look ahead. But that's a rough channel right there. Pretty solid bottom. It goes like right along at a very, very solid angular support there, and then you see another angle of support there, and they're parallel. So it's a pretty good guess as to what the channel is. So let's move ahead. Okay. So you can see here, this is a little far. So I could have, you can see here that I could have drawn it a little better initially, and maybe made this a little wider. So basically, as it goes, you can get indications that you know, you can adjust your channel as you go. It's important to do that because the market is telling you, you know, hey, your channel is a little off, and if it comes back against the bottom of your channel after having done something like this, then it's confirming that you have support there, and this little excursion was just kind of a temporary deal. Okay, this is clearly showing some weakness in the market in this rally, and so that's you know, preparing you for eventual decline, right? So anyway, we see that our resistance is confirmed here, confirmed, support confirmed. We still could draw this a little more like that, and that would be probably better, right? Because you see it comes right back in at that point, it stops there, it stops there. So that's a better resistance line for top level of our channel. And then you see that we've got to redraw this line again along the support that was our bottom line there. And then you see it does act like support here again before it you know, breaks out. So you know, some of these are a little tricky. You can also use the middle line as a guide for how well you've drawn your channel. You see, I didn't really mention that before, but you see right here, because we've drawn across this top, we've drawn across that bottom, that this becomes the middle point is significant to the market. So it's important to be open to adjusting your channel as you go, and being flexible enough to do that. You also have to, as you see, be willing to adjust it even further. I think I really had to adjust it probably about 3 times. Part of that was because you just didn't really get enough information early on as to what the channel was going to be. Okay, and sometimes you'll find that for whatever reason, information was there, but for whatever reason you didn't quite catch it. And it's going to happen. It's okay. Just be good with your risk management and your stops, and you know, you'll either get stopped out or you won't lose much, and occasionally you will lose something, but given the opportunities for trading here, I think that's gonna be a not such a big deal. So you know, I don't want to take all that lightly and cavalier, but by the same token, there are going to be plenty of trading opportunities, and it's quite predictive. So given that that's the case, if you keep a level head, you'll be able to do this, make back whatever money that you lose, and that's part of the point. Is your mentality, your trading mentality is of prime importance, and developing that is key. So you don't get too down about your losses, and you don't get too excited about your wins. It's just money. I mean, money is nice, it's a tool, but you know, it's not going to make you happy, and it's not going to buy you any real friends or any relationships of any significance. But that's what is really what's worthwhile in life, is the relationships. So don't get caught up in this stuff. It's empty and plastic. That being said, though, it's you can do a lot of good for a lot of people. So keep that in mind as you're. And I'm saying this broadly, not targeted to anyone in particular, but just keep that in mind as you you know, as you go through this and you do it, you get better at it, and don't let greed get a hold of you, because if it does, it'll destroy your account. Okay, I'm just here to tell you right now, it'll kill your account. So anyway, my point was here, it was just to show you how on any time frame, you always have channels going on. This is the monthly chart. Okay, so I've drawn a number of channels in the monthly chart. There's different ways to do it, as long as you're hitting as many support and resistance lines as possible, and not just currently, but in a predictive way. Then that's really all that you care about, and that's how we define that a channel exists, is from the support and resistance that it predicts, not just historically, but predictively into the future. So anyway, going forward here, I want to redraw this guy, and let me close that off. I don't want to have that in front of me when I draw this. I just want to prove the point again that see, that's another way to draw that same channel. You've got resistance there at the support, or rather support at the resistance level. It bounced off of that. It came through. It found some support at that area. Continued. It actually bounced before that, and then found more resistance at the middle point. That's another good indication. And then in parallel to that and to that, you find support there. Okay. It bounces right off of that, which was, semi-predicted here. Okay, because I don't think that's a whole lot of information to go by, but it is some good information to go by. And this is, I would say, a good, especially this green bar, that's a good indication that we're a bullish indication. Okay, and then you could have closed it right there at the red. That would have been a good trade over these money months. So anyway, here I go again, moving this a little too early. So if we're breaking out here, you see that we're breaking out. Okay, now this long tail on that one candle makes you believe that maybe we're going to go back up, maybe back into that channel. So you might not think that that it's going to be creating another channel, but this kind of confirms, this red one confirms that it's pretty much broken out. What you have here, though, in a way of what to work with, is you have a top there, and you potentially have a bottom support there. This needs to be confirmed, of course, but that's kind of what we have to go on right now. I would say that because of that kind of helps us to establish one side of the channel, and then we can draw extend it out and draw it out. You'll notice also a lot of times the width of these channels are very much the same. So whatever the width is that you find is most common, and you can measure it, let's say that's 150, and that's 121, okay, 121.5. So work out the math. You'll see it's, just 28.5 basically. That's 2,850 pips, which is a lot of pips. And from here, let's call it 224. And let's call it 230, let's say. Straight down. 230 and 195, so that's 35. So, it's a little off, not exactly the same. It's off by about 700 pips or so, but that gives you an idea, and we don't even know if it's confirmed yet. But gives you a good gauge from about what to expect in terms of the size and width of a channel. They do adapt, they do change, but there's a sort of a sweet spot in there that it tends to kind of oscillate within. If I were to, I think I already did this one, but I just want to draw this again just to show you. If you just have you know, if you have very little to work with, draw that guy. You see it does work. It's predictive because it bounces off the bottom, bounces off the, I mean the middle, bounces off the middle, bounces off the middle, back in, bounces off the middle again. So off the top there. So it didn't stay within that channel a whole lot. It did kind of basically broke out, but it came back in. And that's how you can kind of define these channels. Do a little bit more here. So just looking at that, that's how I would draw a channel. Okay, you see, just based on those two lines here and that, I wasn't looking at this, but you see that it did predict that bottom, that middle, and kind of with support there, right? Support for this candle. You see the long lines right there. So there is support there, or appears to be, but it's probably very weak relative to the other stuff because it went down. So that's clearly not the market direction. But anyway, the point being that this is predictive, okay, and that's the power of these, and you can just draw it based on information that you have right there, and it's quite predictive. You know, if you sold it there, you could have kept on going because it's all red. It doesn't have really much sign of stopping. I might have sold it here because of that long candle, but a lot of times you'll see that the next candle goes a little further down because it's soaking up those extra orders. So that's how you draw that. So anyway, I just wanted to show you the time frames, but I also wanted to show you I want to show you that the higher time frame, you want to start from there, and then but I also wanted to show you that you know, once you establish a breakout, or yeah, I guess that's right. Once you establish a breakout, you want to start drawing your next channel, and you use whatever information you have in front of you, which usually it's already telling you what the next channel is going to be. Okay. In this case, the way this has behaved, I might go ahead and adjust my channel. This one is maybe a little stickier. Sometimes you want to put the circles on the top, sometimes on the bottom, but see, something like that. Okay, just using that as my guide for one rail of the channel, and then stopping the next one at the bottom of that. You see right away this looks like it's going to go up. So from a monthly standpoint, to me, this could well go up. Okay, so then from there, you know, if we're going to drill into it, we can tell that this is going to be a channel here. Okay, this was a channel here. So, you know, I'm kind of all over the place giving general tidbits and things. A better teacher would isolate different points, but you know, this is my first couple of videos. So anyway, I'll continue on in another video.